Now we're going to look at the next component of the financial statement, next element of the financial statement, that is income statement, commonly known as a profit and loss statement. So we'll just try to study it on the same lines of balance sheet, like, what does it represent, what is the purpose, how is it useful for the project management wise, and stuff like that. So first of all, let us understand what does a profit and loss statement represent. So as the name suggests, the profit and loss statement represents the profit or loss earned by the entity over a period of time. Now that time can be a daily basis, weekly basis, quarterly, monthly, yearly, any time. Unlike balance sheet, it is not required that a profit and loss statement has to be there for a one particular day. Profit and loss statement can represent any given time frame. It can represent up to a period of 10 years, 1 year, 5 years, anything you name it, you can make it. Okay. So that's what is profit and loss statement. It represents the profit and loss, or you can say in a way it gives you the net results of your activities done for a period of time, and that activities will comprise certain income generating things, certain expenses. The net result will be either profit or a loss. So that's what is done by the profit and loss statement. The profit and loss statement elements are revenues. Now these are the inflows, or you can say the earnings arising by performing core operations of the company, not any other activity, just core operations. Let's say if the company is engaged in the business of providing service, education, coaching, okay, but if in case of that education coaching, it had an auditorium and it leased it out and it gave it out for some corporate events and stuff like that, those income from the renting out of the auditorium won't come in revenue, they will come under gains. So gains are basically those inflows arising from performing activities other than revenue generating activities, whereas revenues are those inflows which arise from the core operations of the company, undertaking the core activities of the organization. On the same line, we have the expenses and losses. Now expenses are basically the outflow, the reverse of the revenues. They are the outflows which are occurring because of performance of the core operations of the company. Okay, because the company is involved in education service, it needs to pay its content developers, so that is an expense for the company. But because the company is letting out the auditorium on a weekly, on a rental basis as per the occasions, as per one-off thing, it needs to pay an additional housekeeping guy to clean the auditorium. So that is a loss for the company, in a way an expense or an outflow from performing other than core operations of the company. So that was all with regard to the elements of profit and loss statement. 4 elements: revenue, gains, expense, losses. And unlike like we had a relationship in the balance sheet, we also have their relationship in the income statement. Your income or your loss, either of things are going to be there. It's never going to be both of them, and that's a basic thing. You cannot have a plus and minus simultaneously. It will be either a plus figure or a minus figure. Will be equal to all the revenue and gains minus all your expense and losses. So all the positive or the incoming minus all the outgoing, that gives you the net result, either an income or a loss. Just let's quickly look at an example in the same lines as we looked at for the balance sheet, and that will help us understand what exactly is an income statement prepared. So here, if you see net sales $800,000 less the cost of goods sold. So here this net sales forms a part of your revenue, and this cost of goods sold forms a part of your expense, because these are performed towards operating, or you can say the revenue generating activities of the company. Again, selling expenses, these again form a part of your expense because they are performed for day-to-day core operations of the entity. Administrative expenses, they also form a part of your expense because without these administrative expenses, the core operations cannot be performed. Other revenue and gains, these are part of your gains. This can be by sale of a machinery, by additionally renting out the premises, and so on. Other expense and losses, these are part of your losses because these are generated not because of the performance of the core operations of the company, but because of any additional other activity. It can be like sale of a machinery for a loss. Possible, right? I had a machinery, I sold it for a loss because it was not giving any value, so I just decided to convert some cash on it, but I did realize a loss on that. How did that happen? Suppose I had an old typewriter, okay, an antique typewriter worth $2,000, but nobody's willing to type, nobody's using that. I found a buyer on a Craigslist or a eBay for $500. I sold it for $500. I made a loss of $1,500 because the value of the typewriter was $2,000, but I had to sell it for $500. That means I made a loss of $1,500 over here. So that is how you book an expense, you realize and loss, and you realize other gains and revenues. That gives you your income before taxes less the income taxes, and that gives you your net income over here. So I hope with this thing you got a quick glimpse into how the financial statements and balance sheet are prepared. How do you interpret the financial statement? How do you interpret the balance sheet, and so on? In the next session, we're going to see an example on how project managers can plan can defend themselves, can defend their projects by utilization of the income statement and the financial ratios. That will help you to understand and the importance of knowing the financial concepts pretty well. Okay, I'll see you in the next session. Till then, if you are from non-financial background, just make sure to go through the financial slides, at least the balance sheet and income statement again. Till then, have a great study time.